Hello everyone, this is Joy. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. China's steel market is showing signs of rebound this week, but the key question is whether that recovery has enough momentum to last. After steel futures fell to their lowest in more than a year, domestic steel prices in China moved higher this week. Export prices, however, have only just stopped falling and began to stabilize. So what changed? Several factors came together at the same time. Steel supply tightened. There are market expectations for a seasonal demand improvement during August. After steel prices dropped to relatively low levels, we also saw more money coming back into the market. Then there is the cost side. Coking coal had been falling, but that trend is beginning to change. In the first week of August, the market started to rethink expectations around the coal mine production resumptions in Shanxi. At the same time, the supply-demand gap in coking coal came larger. So basically, coking coal prices started moving higher again, and that gave steel prices some support from the raw material side. Put all of that together, and well, Chinese steel prices finally stopped falling and started to rebound. So we also saw some improvement in the market transactions, which is another positive sign. Next, let's examine the supply and demand side. This week, apparent demand went up by 470,000 tons. Inventory went down by 246,000 tons, and production went up a bit. In other words, demand growth significantly outpaced the increase in production, helping inventories fall during this week. That points to a clear improvement in steel market fundamentals. But here is the key point. The market is still questioning whether this improvement in demand can sustain. China is still in the traditional off-season for steel consumption, and underlying demand remains relatively weak. On top of that, recent typhoons and heavy rainfall has also affected construction activity and steel consumption in some areas. So even though the latest data showed a noticeable decline in inventories, demand is still not strong. On one side, steel prices are already at relatively low levels, and stronger upstream raw material costs are providing support. That makes it unlikely for prices to fall sharply from here. But on the other side, weak demand is also making it unlikely for prices to move higher. So looking ahead, the most likely short-term picture is continued volatility near the bottom of the recent prices range. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye.